Hello, and welcome to another update video on Doge. The Doge chart is currently still in a correction, still in a pullback here. And yeah, this correction, this ongoing pullback that we witness here, this potential B wave is not unexpected, given that the minimum requirements for this A wave rally, they were fulfilled. The last rally ended in 3 waves, as you know, if you watch previous videos, and the market has been holding below this resistance area now for quite some time, between 22.8 cents and 24.5 cents. That was our area on the chart, where we said, okay, as long as the market doesn't break above this set of parameters, there is really absolutely no sign that a more substantial low is in place. So the pressure remains downward. So that's what we're tracking at the moment here on the Doge chart. Pressure is down, the trend is down. I'm looking for lower prices still. That perspective hasn't changed. And the support area is also not changed, or has not changed. The market, while it seems like a lot of action and movement, it's simply following the patterns we already talked about, right? This B-wave pullback was meant to happen, either directly or after one more high. Always happy if it happens directly because, I know a lot of people were waiting for corrections. However, I have to say it's probably not finished yet. It might get a few more downside adjustments, the chart here, to complete this decline. So what I will do in this video, take you through the structure of the correction and talk to you about where the correction might end and where it has to end to keep this perspective alive. Now, a correction is typically a 3-wave move. So in this case, an A, B, C structure. And well, this pullback, in wave C should end somewhere in this box. I mean, that's the idea, right? Should not break below 15 cents. Why? Because the 78.6 retracement is typically the maximum for a B wave. Okay, B wave sometimes can go lower, shouldn't ideally. If they do, then the likelihood of the structure breaking will increase, but we have 4 levels here to watch. Normally, I would not expect the price to turn around at the 38.2 retracement. In this case, 20 cents. The price can at least form a bit of a bounce, show a bit of a reaction. It's done that again this time. We're still holding above that level. But based on the microstructure, I would expect at least one more low, maybe 2, as shown here. If we zoom in a little bit, what I will do now, I will remove this resistance area. We don't need it anymore. It sort of served its purpose, because after the initial A wave down, the B wave up, we're now tracking the C wave. A C wave is always a 5-wave move as part of a larger B wave. And we completed waves 1 and 2, and we're now likely in the 3rd wave. Now, the 3rd wave is a 5-wave move itself. Well, I can only identify 1, 2, maybe 3 already nearly done. Then another 4, 5 would be ideal. So that's what I mean, at least one more low. But better, obviously, to consider the entire move as a C wave in 5 waves. We would need another 4-5 pattern, The nearest resistance area I have on the chart here is based on the distance of the currently unfolding 3rd wave, and it's the 50% retracement. So, if this is this smaller degree 4, this one, or the larger degree 4, the market should not break above the 50% retracement, at least not decisively. Because if it does, then something is shifting, something is changing, structure is morphing or something. So we need to be very careful then. When that happens, it could indicate a low is already in, even though it looks unfinished to the downside. But again, we always need the parameters that keep this correction intact. We always need the parameters to keep this correction intact, because we need to know all the risk management parameters. So trend is down. Question is, where should the market end this correction? So as I said, ideally above 15 cents. That's the main question. Do the bulls turn up before we break below 15 cents? Well, as I said, it's probably not finished, this move. I mean, I would base it on the internal 1-2 setup of the C wave. Because normally what we want to see is, in such a C wave, the price to get to, sorry, not in a C wave, in the 3rd wave, the price to get to the 138% extension. It's roughly where it's labeled anyway, 18 cents. and then we could get a fourth wave, and the fifth wave should get minimally to the 161.8 extension. That's at 17.1 cents. Sorry, 17.4. But that's normally like the first ideal target. So I would say overall, seems probable that we reach the area around 17.4 cents to 16.9 cents. This area here. And I mean, maybe lower, but this would be the next main area to watch. That should give you a good overview of the Doge chart. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.